I actually dropped out of college, never went back, became an entrepreneur. I was 100% commission only in that space. I didn't always, I still had a side job. That was my side hustle for a little bit, but I did that.
There is a new American dream. One that doesn't involve working till you're 65 before you start enjoying life. If you're someone looking for ways to regain control over your time and check off that bucket list now, you're in the right place. We share tips from experts on investing, personal finance, and mindset so that you can finally have the freedom to work less and live more. This is the Freedom Investing Podcast with your host, Chris Toribio.
What's going on, everyone? This is Chris Toribio with the Freedom Investing Podcast, and I am so happy you're here to join us for another amazing episode. If this is your first time tuning in, welcome to the show. Make sure to hit that subscribe button so you can stay up to date with our latest episodes. Moving on to today's guest, we have Chris Miles, the Cashflow expert and anti-financial advisor. Chris is a leading authority teaching entrepreneurs and professionals how to get their money working for them today. He's an author, a podcast host of the Money Ripples podcast, has been featured in U.S. News, CNN Money, Entrepreneurs on Fire, Bigger Pockets, and has a proven reputation with his company, Money Ripples, getting his clients fast financial results. In fact, his personal clients have increased their cash flow by $300 million in the last 12 years. Lots to unpack there. Extremely excited for this show. Chris, welcome on board. Before we dive into it, give us a quick 2-minute rundown of who you are, what your background is, and where you are in your journey to achieving time freedom.
Yeah, I mean, you said it better than I'll probably say it myself, right? I mean, the official bio always makes it sound great. But I do live, on a personal note, I do live here in Utah. I actually have a blended family of 8 kids. Between my wife and I had 6, she had 2. So obviously she was more stressed out than I was. But that's kind of what our life is, and, I've been financially independent twice. We'll maybe get into that about, why it was twice instead of just once, because basically, simple story, I screwed up. We can talk about that later. But I mean, really run down, like you said, I was an anti-financial advisor. Well, that's because I used to be a financial advisor. I didn't start out being like the big know-it-all of finance. In fact, it was the opposite. When I was raised by good parents that taught me good values. But the one thing that they definitely had in common between my 2 parents was scarcity, right? There's a scarcity of money, scarcity of time. Hey, we can't afford this. What do you think I am, made of money? Money doesn't grow on trees, all that kind of stuff you hear. The worst one my dad would say is, my work is going to literally kill me. Like, I'm going to die working. And that stuck with me as a kid. That really impressed me because I didn't want to do that. Plus, any teenager doesn't want to follow in their parents' footsteps, right? So I vowed I was going to do a different path than them. I went to college. I was the first one to go to college. And then when I was about to finish college, I was going to become a business consultant. And I thought, well, if I'm going to do that, shouldn't I have real life business experience, not just book, degree and things like that? So I dropped out of college with 1 class to go for my bachelor's. And I said, all right, let's see if I can find a business and just take a 1-year hiatus. Well, I ended up, the first business that came up that really hit me was financial advising. It was something that seemed interesting. It was kind of like, Adam Sandler, if you ever seen The Wedding Singer, when he goes in looking for a job at the bank and he says, I like money. I like to have more of it. I keep a jar on top of my fridge. That's where you come in, and that's kind of what I was like. I was like, hey, if I can learn anything about money, that'd be great for me. But secondly, if I can buy back some of my dad's time, give him some of his life back, that would be worth it to me too. So I went into it. I actually dropped out of college, never went back, became an entrepreneur. I was 100% commission only in that space. I didn't always, I still had a side job. That was my side hustle for a little bit, but I did that. And after a few years, my dad said, hey, come talk to me, come help me out. So the tables turned, right? So him teaching me about, doing everything like spend nothing, save everything. That was my dad's kind of philosophy. He was like Dave Ramsey's older brother that Dave Ramsey looked up to. Right? I mean, he did everything Dave Ramsey talked about, paid off his house early. He was so proud of it. And so when I sat down with my dad, he's 61 years old. He says, all right, Chris, I want to retire soon. What do I do? I said, Dad, if I can level with you, the honest truth is that if it weren't for Social Security, you better hope you die in 5 years because that's how fast your money will run out. Now, remember, he did everything right. He paid off his debt early. He saved in his 401ks, got the match and everything you're told to do, yet it hadn't worked. Okay, Chris, what do I do? I don't know. You've done everything that a financial advisor would tell you to do. I really don't know. And even though there's things I said I could recommend, I couldn't trust the stock market would help him, more than what he was doing already. And so I was in this dilemma. And as I started to look at my own clients, all of them, even the ones I inherited that had decades of financial advice before they came to me, well, guess what? They weren't financially free either. Then I looked at the financial advisors in my office. There's over 100 of us. None of them were financially free off of the investments. They were doing great off the commissions, right? But if you took away their commissions, they would be just as broke as everybody else. There's guys working there since the 1970s, in fact, that were still working in that office. So obviously it hadn't worked for them, hadn't worked for our clients. Why am I teaching this crap? And I had to either choose the paycheck, right? Which I was, bought into that lie for 4 years as a financial advisor, or leave. And I chose the latter. I ended up leaving. I said, I'm done. I can't teach this stuff anymore and feel like I'm in integrity. And so I did that. And I, of course, when the student's ready, the teacher appears. That's when I got into like real estate investing. I found guys that were actually financially free doing the opposite of the things I taught. They weren't putting their monies in mutual funds and 401ks. They were putting it into like real estate or into business. They were doing those things. And that was creating financial freedom for them in some cases in their 20s and 30s. And that's the route I ended up taking. By the time I was 28, I actually became financially independent myself and blew my mind. And that's kind of where, to this day, after a while, I realized that the thing I love doing, regardless of, when I have all that time freedom, was teaching. And that's kind of where it led me down this path of coaching people now.
What an incredible story. And it's definitely something I think resonates with a lot of people that go through this similar type of journey. Speaking for myself, I kind of went through a similar thing. Back in my 20s, I was in a position where like, okay, now I'm making some money through my job. I want to figure out what I'm supposed to do with this so that I can ensure that I have a good and healthy retirement by the time I'm 65 years old. And I reached out to a financial advisor. And a lot of these people were saying, well, look, you can either go with a fee for service financial advisor, or you can go with a financial advisor that takes a certain percentage of your portfolio. And, in your case, I guess, were you like a fiduciary, I think is what they were referring to it as, where you were like a fee for service type of financial advisor? Or were you were you one of those people that also would take a percentage of your portfolio to help manage their assets over the long course?
Yeah, I was actually more the latter. I was getting paid commissions based on that, based on assets under management and things of that nature. I was actually studying for the test to become like a fee-based financial planner, right? But that's when all of a sudden I was woken up to the truth, and then I was like, well, screw that. I'm not going to take this hard test just to then not use it. So yeah, it's I've been kind of looking at both sides of this fence, but I was primarily on the side of earning the percentage off of the assets under management.
Absolutely. And I got to tell you, Chris, my experience with a financial advisor was very similar to yours in that I felt like the advice that I was getting was that I was playing not to lose instead of playing to win. And it came to a point finally where I had to ask the question, well, what if I could make this spread through real estate investing and benefit from the cash flow and things of that sort? And he's like, personally, I cannot act as your advisor in that role just because of the risk that presents itself to you. So it was almost like he was kind of just having to protect himself as your fiduciary and not advise you to get into something that a lot of people seem as risky.
He can't, and it's not because of real estate being risky, even though it can be if you do it wrong, right? There's no doubt you can lose all your money in real estate too, even though it's a lot harder to do than in the stock market. But it's true because what I found out is that I was just a salesman in a suit, right? When you get those licenses, that's supposed to be the thing that makes you think that we're more knowledgeable, we're financial experts in some way. That's couldn't be farther from the truth. The truth is that really we are just trained salespeople. We're licensed to sell certain types of investments, which are securities based. That means really just stocks, bonds, mutual funds, period. That's it. Like that's all we're allowed to do. So even if he knew real estate could be better, the problem is that his licenses won't let him. If I were to peel back the curtain a little bit more, just this last spring, I was actually at this mastermind roundtable, and And I was like one of the few guys. I was the guy usually wearing shorts and a t-shirt while, kind of like this, right? While the rest of them were wearing their suits and everything else. And when we would talk off to the side and I would tell them what I'm doing, they were jealous. They're like, wow, like you have so much freedom. We can't even talk about this stuff. I said, yeah, that's why I dropped my securities license in 2005, because one, I think it sucks. But two, yeah, you can't do anything. Compliance. I mean, even if you send a personal email saying, I guarantee you're going to have a fun time, because you use the word guarantee, it gets flagged to your compliance officer for using the word guarantee, and then they have to go check it and say, please don't use guarantee in your personal emails, right? Because you can't use those words. That's the kind of stuff that you're stuck to. And so for them, they're like, oh, I would love to do a podcast, or I'd love to do this or that. But here's the thing they say every time. And these guys were high producers. They had a lot of assets under management. On the low end, one guy he works with a bank. He said, hey, I make $500,000 a year just because of having my license. If I did no new business, I make $500,000 a year just off the assets under management. Other guys are making millions per year. So the reason that they feel like they got these handcuffs, right? It's just like somebody with a 401k match. They feel like they're handcuffed, like, well, I can't quit because then I lose my free money, right? That's what they feel like. They lose their free money if they try to go outside of it, even though they know it's better. And the sad thing is, some of them even asked me, they said, Chris, can you coach me? Like, can you teach me how to create passive income? Because I have none. Like, I don't know how to do that stuff. That's the sad truth with them.
That's really, really powerful insight. And I think it will bring a lot of light on, what really is the underlying motive, as well as the underlying situation behind a lot of these advisors that you are trusting with your retirement and the funds that you work so hard to achieve. And so at this point in time, you are 28. You get yourself in a position where you are a self-made millionaire. You're able to retire from your job and do what it is that you want to do. Then what? What happens next?
Well, then I was trying to figure out what to do with my life, right? It's funny because people say, well, why do you keep working? I'm like, well, have you ever stopped working? You ever been in that situation? Because if you've ever, quote unquote, retired, at least for me, right? Some people might be different. Everybody's different. But for me, having no purpose, having no real, work to do is actually really boring. I actually got depressed a little bit. And so I was getting fidgety. I'm like, what am I going to do with my time? I need to do something that's worthwhile. And that's where naturally I was getting pulled into coaching, because people saw me, this 28-year-old, they're like, how are you, this kid, retired? Like, there's people twice my age or more than twice my age saying, how did you do this? Like, I can't do that. And so it kind of pulled me in, and I ended up eventually like partnering up with several guys. One of them was named Garrett Gunderson. If you ever read the book Killing Sacred Cows, we actually partnered together, started a company together that eventually became Wealth Factory today. And so I started doing that. The funny thing is, I mentioned it took twice. While we were doing that, Garrett and some of his partners, all of us, they said, hey, Chris, we want you to cut off your passive streams of income. We want you all in. Like, this is a mission. We're going to get people financially free out of the rat race, right? Well, the next thing you know, we're all in the rat race ourselves because a recession hits. The market that we were all marketing to was just one market, and they were flippers, people that were real estate flippers. They were getting hosed. So our business was sinking. We cut off our passive streams of income. And so now I went from, like you said, to kind of like millionaire to upside down millionaire. After a matter of months and going the whole, like over $16,000 a month, I was about $1 million in debt. And I was back in the rat race. And of course, I couldn't integrity. Again, integrity is a big thing for me. I can't teach what I don't know or don't do. And so I was back in the rat race. So I stopped teaching people how to get out of the rat race in 2008 because I was in it. And so instead, I started teaching people how to get resourceful and creative, because everybody was asking, Chris, well, I would love to pay you, but I don't have the money to do it. And in the back of my mind, I wouldn't say it verbally, but in the back of my mind, I'm thinking, I'm in $1 million debt hole. I've got collectors calling me multiple times a day. Your situation's easy. I could find money in your situation because I haven't get creative in my own, where I had no money and no credit left. I was having to essentially create money from nothing. And so I tell them, if I can find money, would you pay me? And they said, well, yeah, if you can find the money to pay you, then great, go for it. And so that's what I started doing. That's actually what started the whole cash flow process that you hear Garrett Gunderson talk about today. That's my process from my crap I was going through. I eventually brought it to all these clients, and the next thing you know, that's where that, he's mentioned, $300 million in 12 years. Now it's going on about 13 years. It's about 2010. We've been helping people get, free, even not even counting getting out of the rat race, right? That's what we teach mostly right now. but even just freeing up cash, even saving money on taxes if they're business owners, especially, or finding money in places that they can turn around, paying off debt faster, whatever it might be, freeing up cash flow so that they have more freedom and have more options. Because really, that's where options come from and freedom comes from, right? Freedom comes from having more options. And how do you get more options? Is freeing up more cash flow so that you have more choices, more things to do.
I love that. It's the freedom of choice, right? Like you are literally positioning yourself to be able to make the choice and say, I'm going to go this route and I'm going to go this route. And a lot of people take that choice for granted. But once you understand that sometimes it's just a matter of making some small changes in your life to be able to position yourself to do that, it will completely change the trajectory of your own life. That's amazing. And I also want to preface this by saying that I'm in the middle of reading Killing Sacred Cows right now. So this makes me that much more excited to finish the rest of the book. Awesome. All right. So just to summarize what we've talked about so far. So it sounds like when you were in your 20s, you became a financial advisor. You realized that you wanted to make sure you practiced what you preached, and you weren't able to give people an understanding of like how to better position themselves for retirement. So you left that. And then you became a self-made millionaire by 28 years old. And I think I forgot to talk to you about how you went about becoming that millionaire by the time you were at age 28. Like, what did you do after you quit being a financial advisor and getting yourself in position to where you were able to retire?
Yeah. The cool thing is I didn't even have to become a millionaire to retire first, right? That came later, surprisingly enough, because I was able to buy more assets. What happened first was just getting streams of income coming in. And it was kind of accidental the first time. I knew about creating real estate income, and I was doing that too, creating passive income through real estate, but creating money from nothing, right? That's where it requires sometimes like time, energy, or creativity, right? One of the key things, and you're probably going to end up asking this question anyways, which is like, what can somebody do to free up their time, right? It's like, it's the who, not how. It's like, I used to think I was the rugged individualist. I had to do everything myself to make every dollar myself. And one of my friends who was a millionaire, he asked me, he said, Chris, if money are no issue, what would you spend your time doing? And at the time I just said, I'd go travel more. Because people that usually, if they don't think about it too much, they usually just answer whatever they're not doing. So I wasn't traveling. So I said, I'd travel more. He said, Chris, you're really going to travel 52 weeks out of the year? Okay, well, no, maybe 7 weeks, 8 weeks out of the year I'd travel. Okay, Chris, what would you do the other 45 weeks? I said, I like teaching. I love ballroom dancing. Little known fact, I was one of the nation's top amateur ballroom dancers in the early 2000s. I said, maybe I'd teach ballroom dancing. He's like, but Chris, you quit being a financial advisor. Now you're a mortgage broker. Or would you keep doing that? I said, no. I'm like, I actually like teaching people about the mortgages and doing creative things with the equity in their home. But I really hate underwriting and paperwork and all that kind of junk. Chris, why don't you find somebody who actually likes doing that? Are you telling me there's nerds that actually like doing paperwork? Chris, trust me, there are nerds that like doing this stuff. And so I actually went to my broker and I said, hey, is there a guy that would fit this description? They said, yes, that's Clark. Go talk to Clark. I mean, obviously, if your name is Clark, you got to be a guy that likes paperwork, right? And so I went to Clark and I said, Clark, if I just spoon feed you people that I spent half an hour with, they already want the mortgage, and you just do all the rest of the work, would you do that for 50%? He said, absolutely. That's easy. I said, great. Let's split it 50-50. And so I would literally spend half an hour to an hour with somebody. And then they'd say, great. How do I get this mortgage? Talk to Clark. The next thing I know, about a month or so later, I get this check in the mail for like $1,000 or $2,000. I'm like, holy cow. I mean, as a financial advisor, sometimes I felt like screaming like Napoleon Dynamite. That's like $1 an hour. Gosh, because you'd spend so much time sometimes in business. But there I'm making over $1,000, $2,000 plus dollars an hour. And it blew my mind. And the next thing you know, I created literally before Tim Ferriss wrote the book, I created like this 3 or 4 hour work week because I wasn't just referring to them, right? And it was only like family and friends. I was not marketing or doing anything. I even knew a wholesale jeweler in Salt Lake City. And I said, people would say, hey, I'm going to get engaged. I'm like, don't buy your ring at the mall. Like you're going to get ripped off. Buy it from these guys. You'll pay a third of the cost. And so they would go to this wholesale jeweler, and then the wholesale jeweler would send me a check for like 5%. And so it kind of became like affiliate marketing, even though I wasn't doing anything official. In fact, it was so hard because I was making $4,000 or $5,000 a month between my real estate and between that. And all I needed was about $4,000 a month to live on. So by June of 2006, I was financially independent thinking, holy cow, that was so easy. And people would ask me, well, what do you do? And I wouldn't know what to tell them. So I just, to buy time, I'd say, I sell drugs. I'm like, oh, that's so funny. I'm like, how do I describe what I'm doing? Because it's so little of work compared to what you'd think I'd be doing. And I mean, the thing that blew my mind was June of 2006. That's when I knew I was financially independent. Was, I only needed $3,500 a month or so to live on, but I had made $18,000 that month, which I was like, holy cow, that was not much less than what I was making as a financial advisor. I mean, it was just, I mean, and I'm talking about like per year, right? Like per month. I never, as a financial advisor, made 18,000 per month up to that point. So it was kind of like, oh my gosh, this is incredible.
That's amazing. And so there's a lot of components to that, right? There's
Mm-hmm.
the strategic planning, there's a financial literacy, and there's also a mindset and being able to take action towards what it is that you want to do, right? And we
Right.
always mention, because it said, it sounds like you had to go through this process twice. Now, before we get into that, was that second time around easier than the first time?
Yes and no. The harder part was I had to, dig out of $1 million debt hole without filing for bankruptcy. Right. That was the hard part. I mean, if you think about it, the homeless guy on the street was $1 million richer than me, so I was coming from a negative place where before I was coming from like a little over a zero place. But it was easier because, I mean, for example, I went through a divorce in 2015. That was like a financial reset button for me because right when I was starting to get ground, I paid off almost all my debt by that point. But then it's like, boop, okay, you're going to have to reset now and give all your money now to your ex and start from scratch, right? But that was 2015. And I vowed, I'm like, listen, I got to get my focus away from just business income or revenue. I'm like, I got to be profitable in my business and I got to really start generating residual and or passive streams of income. And so I started getting hyper focused on that so that by the end of 2016, I was financially independent the second time. And so it did require focus, but it was a lot easier next time around because I already knew what it took. And because of all the crap I went through, and I learned a lot from that recession, I learned what not to do, but I also knew what worked. And so it was easier for me. And if anything, I knew it was almost like I felt it was destiny because I just knew that I was destined to figure it out and get out of the rat race again, just to prove to people that principles work. Like if you follow the right principles, the strategies end up being easy. It's just following the right principles and then using the strategies to support it, whatever those strategies are.
I love that. And it's so powerful. And I think the mindset component really comes into that as well, because there's a reason why there are these lottery winners that go broke, a year or two after winning. And there's a reason why these people who are successful, go through these challenging times, kind of in your place where you had to get yourself, you were achieving this level of success, and then suddenly you were $1 million in debt and somehow had to figure out a way to get yourself out of it. And I think that's a really important thing that I want to drive home to our listeners here. And so talk to us a bit about that. So you were, you're on your way up out of this second hole that you kind of got yourself into. What did life look like at that point? How did you position yourself to get yourself out of that?
Yeah. Well, I mentioned one, I was trying to get my business as profitable as possible. So it's kind of, if you ever heard of the book Profit First by Mike Michalowicz, great book. I'd recommend, by the way, for anybody for that matter, but great, especially if you're in business. But in that book, actually it was two of his books. There was that book that helped me really figure out how to be lean and mean in my business. But then the thing that also helped is he had a second book that I would recommend. That book's called The Pumpkin Plan. If you've never heard of that book, I guess the book came before Profit First is what I found out later. But in The Pumpkin Plan, they talk about those prize-winning pumpkins you see about in the news that are humongous, right? Well, apparently these pumpkins all come from the same pedigree, the same seeds out in like Nova Scotia, Canada. They buy these seeds for sometimes up to $100,000 for these seeds to then plant them. And then as these pumpkins start to grow on this vine, right, this mega vine, right, they start chopping off the smallest pumpkins only so eventually at some point feeding the largest pumpkin so that the full vine's giving all the nutrients to just one pumpkin. So it's that focus, right, versus spreading yourself thin. Many people talk about the Pareto's principle, that 80-20 principle, right? Where 20% usually generates 80% of your income, or 20% of your clothes gets worn 80% of the time, right? And those kind of things. Well, I took it a level deeper after reading that book. I said, what if I Pareto the crap out of the Pareto's principle? So what if I took the top 20% of the top 20%, which would theoretically be the top 4% that generates the top 96%? So even in my business, I started looking at like, what are the ultimately the best like leverage or results I'm getting out of my business right now? And I realized at that time my podcast was, and I realized it was more my voice. I wasn't doing video back then, and now I am, but I realized it was my voice, because sometimes people would just email or call up and say, Chris, I honestly have no idea what you do, but I hear your voice and I feel like I can trust you. And I was like, well, okay, that's something there. That's got to be something special. How do I leverage that? And so I started going on other people's podcasts, just like now, right? Started doing that. And as well as doing my own podcast, I cut off all the networking stuff I was doing, spend like 10 hours a week networking locally here in Utah and stuff, which really wasn't producing any results. I was cutting off like speaking on people's stages around the country. I was like, screw all that. Like, let's just cut it down to like what's really, really working. Get down to the bare bones. My staff got down to just me, essentially. Even my VA ran out of work to do. She's like, I'm only working 4 hours a week, Chris. I'm just going to go do my own business now. So she went and launched her own business because I wasn't paying her that much, and it worked out perfectly. I mean, I was really down to like this small, lean and mean business. But ironically, when I did that, even though I cut down my hours from like 50 hours a week down to like 5 to 10 hours a week, all of a sudden my business doubled in revenue, which means the profits were like 8 times, that was the first step, because now I had all this extra cash coming in. Now I can take that cash, start leveraging that by going to like doing real estate investing and different types of alternative investments, and start feeding that and start creating more passive income there. I started focusing on how can I create other residual incomes through the business, although that was kind of a minor part of it by that point. So it was almost flip-flopped from the first time. And then next thing you know, by 2016, I'm looking at my numbers, December to be exact, and I'm like, whoa, here's my expenses. Here's my passive income coming in. It's now beat it. Like, all right, I did it, and so that was really it.
Holy cow. And to summarize, how long of a span of time was it from the time you realized you were $1 million in the debt and then the time where you realized that now you just got yourself back out of the rat race? How many years would you say that took?
Yeah, I realized it was about $1 million in debt in 2008. And that was the end of 2016 when I finally, dug out and was able to be financially independent again. So it was about 8 years. Felt a lot longer, to be honest. I mean, especially that 2008, 2009 era, that was really rough on me, and 2010, things started to get better. So I started to pay off that debt. I paid off, I would say, 900,000 of that million plus, roughly about 3.5 years, from about 2010 through 2013, and so then I was just got to the point where now it was more manageable. And then I was growing a business because at that point in 2012, end of 2012, actually, Garrett Gunnarsson and I split. That's where I created Money Ripples 10 years ago. And then he did his thing, I did my thing. And so it was like, again, a reset button. A few years before, I had a divorce reset button. So it was kind of like this up and down roller coaster a little bit, like a lot of going on. But once the divorce happened, and then once I was really focused, I mean, that's when like everything just exponentially skyrocketed.
That is so powerful and equally inspiring. So kudos to you for not only sticking it out, but having the endurance to be able to do that, right? There's some successful people that I've spoken with over the few years. And the first question they actually ask me is, how much are you willing to endure? And that really sticks with me a lot, because as you're saying, it is not like a straight line of success. There's tons of hills and valleys that are along the way. And a lot of times it's a question of how much stamina, how much endurance, and how much adversity are you willing to overcome to that level of success.
That's right. It's true. I mean, a lot of times it's just like in a marathon, right? Like I run marathons a lot, and I actually just ran the Chicago Marathon, got a top 7% in the world there, and I got top 2% in a race just recently as well. And it's the same thing. People are like, "How do you do it?" I'm like, I just keep running. It's almost like I just Forrest Gump it. It's just got to be brainless and dumb. It's like I just kept running. Like that's it. Like you just keep going. You just don't give up, and that persistence often will outpace and beat everybody else, because most people will quit or sprint and then quit, sprint and quit, and it's always hard to get that momentum going if you quit. So if you just keep it going, that it almost becomes an easier process, that pace.
I love that. That's so important. And so right now with Money Ripples, talk to us a little about the experience that, some of these clients can have. Like, what do these clients look like that are coming and approaching you? What kind of situations have you been finding a lot of them in? And what are some examples of the different types of things that you do to help them improve the situation that they're in?
Yeah, that's where it gets fun. I mean, we get a lot of times the people are the Dave Ramsey poster children. The people that Dave Ramsey would put on a show and they'll scream freedom because they paid off their last credit card or whatever, right? But almost every one of them gets to a point they say, all right, I'm saving money. and the stock market kind of sucks. Okay. I don't know why I'm gambling in this stupid thing. And have most of my debt pay off except maybe my house. Well, now what? Because the thing is that nobody in that world really teaches you how to become free. You could be debt free, pay off your house, and then you still realize, wait a minute. Okay, yeah, I freed up 30% of my expenses. I still have to keep paying 70%. How do I have income coming in that's enough? I even had one guy come to me recently that, I mean, he was on the more extreme side of money, but he had $3 million he had saved up in the mutual funds and whatnot. He was 52 years old. He was putting away a couple $100,000 a year to build and add to that, right? And his financial advisor, because his goal was $500,000 a year of passive income. That was his freedom number, right? And the financial advisor said, well, based on my calculations, if we keep doing this, if by the time you're 65 in 13 years, you might just barely have enough to live on $500,000 a year. He's like, wait, so you're saying I got to still keep packing away a couple $100,000 a year for the next 13 years, having 3 million already, and I'm still not there? Well, yeah, because you got to have about $20 million to finally live on that 3%, and then taxes come out too. So he's like, oh, this is stupid. And I'm like, dude, we could take $3 million you have there, make 10%, and that's $300,000 a year. You're not $500,000 yet, but you take the $300,000, pack it on with your $200,000, $500,000 a year. Guess what? In a couple of years, then three to 4 years, you'll be at $500,000 a year. And that's kind of what it is. We had another guy who was actually retired colonel from California. He had $1 million. He just happened to time the market perfectly. He even got out before Y2K. He pulled his money out of the market then, and he pulled his money out of the market before 2007, 2008. So he's like the perfect timing. So he happened to barely save up $1 million. And of course, the financial advisor says 3%. He's like, well, that's $30,000 a year in California. No one can live on $30,000 a year, and they get taxed on that $30,000. I mean, think about it. You're a millionaire, and then you're living on less than poverty level. You're a broke millionaire. That's so stupid. Well, flash forward, we actually just did a podcast with him, and now he's got like $11,000 a month coming from that $1 million versus $2,000 a month he would have been living on, right? And so that's the thing that gets exciting is that we get people, and not everybody has like $1 million. Sometimes it's like, $250,000 maybe, or a few $100,000. Sometimes it's $500,000. Sometimes it's home equity. Sometimes it's money that's sitting in stupid stock markets or just sitting in savings that we can just turn around and make work better. Even business owners, like a lot of times they'll have a lot of money sit in their business and they're like, yeah, I'm keeping it there, but is it really working for me? Well, can we put it in other places where it will work for you and still get access to it too? Things like that. So that's kind of the stuff we have a lot of fun with. And that's why on average, I mean, our number's been about 35,000 in the first year people free up and or make, but that number is now quickly climbing because of just we get more and more people, especially after all the inflation and everything. People are like, I've got equity in my home, I've got cash. Temporarily, if it's not in the market, you would have lost 20% in the last year. But if you got cash, you can get it working for you better. And that's really what we're trying to do is get people financially independent within 5 or 10 years.
I love that. And, I've had conversations. I want to ask a question because I've had conversations with several people that have invested in real estate specifically and have provided the reasons why they kind of keep their money out of the market for the time being. And what they're saying is because the Fed has announced that they're going to be raising rates multiple times continuously still, right? The inflation has still not taken a huge hit quite yet. They're going to continue to raise rates over the course of the next year. And so when you take a look at like what that traditionally has meant for the stock market is every time the Fed raises rates, they tend to have a dip, right? Mm-hmm. And so their rationale is like, why would I put money into a sinking ship knowing that the Fed's going to increase rates, valuation of these assets on the market are going to be going down. And so the same goes for people putting their money into a 401k, right? Same thing can be said for that because those are primarily the assets that you invest in. And so apart from the tax benefits as an incentive to invest in the 401k, I guess, what are some alternatives that you know of, for people who want to put their money away into a different asset?
Well, I'll tell you, one, there are no tax benefits of a 401k. There's tax delays, right? They don't tax you today, but they will tax you later. The question is, are you going to get taxed more today or down the road? And if you're like that HR person, like when I used to work a corporate job before I became a financial advisor, I worked a corporate job. They had their 401k, and this HR person was probably no older than like 30s, early 30s. She's like, so here's why you want to do a 401k, because if you put your money in, you don't get taxed. But when you're older, you won't need as much money because, old people don't do anything. And so you can just live on, less money and you won't have any kids anymore. And so you'll be in a lower tax bracket. And of course, all the older people are just looking at her like, you're a moron. Like this is why you're an HR person, not a financial expert or anything. Because the truth is, any person, and I know this, I'm in my mid 40s now, right? It gets more expensive. Inflation alone makes it more expensive. Even if tax rates stay the same, just because of inflation alone, you have to pull out more money, which means it puts you in a higher tax bracket. And you don't think the government doesn't know this? Like, of course they do. They're literally banking on it, So I bring that up because you're right. Like a lot of people think they're getting this tax advantage because, hey, I'm not getting taxed on it. Well, not now, but you will later. And that makes it harder, right? So there are ways to get taxed better. And so other strategies you can do, like there is I don't believe in doing just like rental real estate where you manage a rental. Like I don't believe in that kind of stuff where you buy your backyard house or whatever, In fact, if you're on the western half of the United States, I pretty much recommend don't buy any rentals right now in this part of the U.S. But when I look out Midwest or in the Southeast, I can find much better rentals, better values, and I don't have to manage it because I buy what's called turnkey rentals, which means you go to a turnkey company, they help you find the rentals, you know the numbers you're going to make before you buy it, and they help you put a renter in because they'll property manage it for you, right? So you just have to buy it and then collect the net rent checks. And generally speaking, even now with the higher interest rate environment, there's still turnkey providers that we use. We have like 6 of them in our network. There's like, at least 1 or 2 that can get you at least a 10% plus cash on cash return on your money. By the way, just so you know, the stock market for the last 30 years, if you look at the S&P 500, has only averaged 7.7% for the last 30 years. 7.7 is the actual real rate of return of the S&P 500 if you run the numbers. So think about that, 7.7%, and you're taking all this high risk to get mediocre returns, where I can make at least 10%, and it's not just 10% return, right? It's 10% cash flow. I'm not even having to pull out money from my principal. Most of the time people get in retirement, they go into conservative funds so they don't lose money in the market while they're growing it. And of course, they're making maybe 2%. That's why they say live on 3% a year because of inflation and everything else. They're trying to get you to not run out of money before you're dead. Here, I can make 10% plus, and not just in that kind of real estate. There's syndications, meaning you can pool your money with other investors, buying apartment buildings, self-storage, even in oil and gas industry. There's things like in mineral rights where you can own the land, lease it to the oil companies. They pay you whether they make money or drilling or not. And then if they drill and make money on that, you get paid on that too. So you double dip on their investments. There's things like that. There's like land partnerships or different types of partnerships you can do, hard money lending, all things you can make double-digit returns on with your money. So if you have $500,000 in cash, 10%, which is kind of conservative for what our clients get, that means you're making $50,000 a year and you're not touching your principal, right? I mean, how awesome is that? I mean, that's the thing that gave me hope. That's what actually keeps me not retired, right? So to speak. This is why I'm work optional. I like to use the term work optional because there's a lot of people like me that don't want to just retire and do nothing. They want to do something that has purpose and meaning. This is what drives me. This is what keeps me going because of that very reason.
I absolutely love that. And on that note about real estate, if you really want a tax benefit, you also get the depreciation when you invest in all of these things too. And so that's a true tax benefit and not something that you're just going to be deferring it up until you're 65. So that's definitely all of which are really powerful things. And I highly suggest people re-listen to this because it'll help reframe your thinking about how you plan for retirement. Mm-hmm. All right, folks. So we are coming towards the end of today's show. But before we finish, it is time for the Freedom 5. These are 5 questions that we ask every guest on our show, starting with the most important question. What is your why? What is the underlying motivation behind everything it is that you do?
Yeah, I mean, I kind of was leading into that, wasn't I? I mean, this is it. I mean, I'm kind of faith-based. I believe there's a God, and I believe that God puts us on this planet for a reason, and we all have our own unique gifts and passions and strengths that we can bring to the world. And kind of like what Steve Jobs said before he died, is that he wanted to leave a footprint on this planet. I feel the same way. Like I want to leave my own footprint on this planet where I can bless more lives. And I can just live happy doing what I'm doing, just be financially independent. Trust me, my life would be way simpler, way easier just doing that. But I also believe that it's kind of like, Spider-Man, quote Spider-Man, right? Where there's great power comes great responsibility. I really believe that's a true principle in life, is that I believe I've been blessed with something, I should share it. And so that's what drives me every day. That's why, for a time, although I'm getting more time freedom again, I was almost full time because our business started blowing up. And I was like, I better start hiring people because it's blowing up whether I like it or not. Either I turn people away or I invite them to come. And that's it. Like my mission really is to kind of screw over the financial industry, revolutionize it in a sense to say, wake up, let's do something better that actually has been proven to work versus financial advising, which has been proven not to work. And so it's the thing that keeps driving me, keeps me going every day.
I love that. Second question we have here. What book has had the largest influence on your life?
Well, I kind of mentioned it, but it's funny because it just popped in my head. I had another book in mind because I can mention like the Holy Scriptures and stuff. But the truth is, I mean, the one that shifted my thinking and helped change towards this conversation specifically was that book, The Pumpkin Plan. Profit First was great, but The Pumpkin Plan was the one that really did it for me.
All right. That's definitely another one I'm going to be adding to my list. Third question we have here. What is the most impactful thing, whether it's a piece of technology, a habit, or a person, that has helped in freeing up your time?
You know, I would say, I mean, definitely contractors. It's not even a technology thing. I'm pretty low tech. I was going to say Calendly, if I can say that fast, right? But I mean, that freed up my time big time too. But the truth is, I'm like really using like systems, right? Processes to hire the right people. I love the predictive index when it comes to trying to find the right fit on your team. I've always been kind of bad at the hiring, firing part. But when we have the predictive index to say who's likely to succeed and fit in our team just right in that role, man, that's been better than using like the Colby, definitely better than Myers-Briggs or any other type of test that you use. I've loved that predictive index.
I had a chance to take the predictive index. Someone, gave me a copy of the exam, and I got to see my results. And it's such a short exam. For anyone that doesn't know what it is, like I think you circle a bunch of words that you kind of. It's almost like a word search, isn't it? Or it's like you just have to pick a bunch of words that you feel apply to you, and then you have to pick a bunch of words that you feel others perceive you, and like that's pretty much it. And then somehow, some way, it's able to deduce like what type of person you are, how you're going to act, and all of these different things. It's kind of creepy, but also extremely accurate.
It is creepy, isn't it? You think, because I used to do tests and measurements. Like that was my thing I studied in college. It was sociology and tests and measurements. Statistics was my favorite. So I would take all kinds of tests, but that one blew my mind just how accurate it was for sure. What did you end up coming up as, by the way?
Ooh, this was a few years ago, so I don't actually remember.
Okay.
Yeah, I don't actually remember, but I just remember feeling very naked after seeing the results of that exam.
Yeah, it's weird because I came up as an individualist, which is pretty much the person that has a hard time being with a team. So I've had to learn from that to know how to hire and bring on people that do have more of that, ability to do that. So I could work as a CEO or my own COO. Although I was like, I'd rather be the CEO versus the COO. So I ended up having to pick my roles and finding my right sweet spot within my own business because of it.
Yeah, that's a great point in how you use kind of those results on your own predictive index. I'm going to have to look that up so that way I can apply that better in our business as well.
Yeah.
Fourth question you have here. What is the number one piece of advice you would give to anyone looking to achieve more control over their time?
Yeah, the best advice would be really to kind of step outside of your own box, right? And it might require having a different perspective, somebody else's eyes looking at your situation, an outside perspective, of course, but really step outside of yourself to question everything you're doing. Because the truth is we're creatures of habit. Most likely you're in your own rat race because of some habit or belief that's keeping you there. So it requires you to start dispelling old beliefs that aren't serving you anymore, right? They might have got you to survival, but maybe not to be thriving. And so that's the thing we got to get you to do is how do we switch that? And doing what you're doing right now, even if you're like listening to podcasts or learning, whatever you're doing, right? This is exactly what you need to help wake up. And then, of course, when you start to get that impression, especially if that impression comes more than once in a week, that's kind of my own like little litmus test. If I hear something twice or three times a week, like a book recommendation or something I should be doing, that usually is a clue from the universe to tell me you better dang well do it, right? Because it may not come back again. So get to it and take action on that.
I love that. Yeah, I mean, on that note of these type of beliefs that you've traditionally been doing, I mean, something as simple as like mowing the lawn on the weekends, right? Like this is something like growing up, you just mow the lawn. It's just one of those things that you do, and eventually you get to a point where you're like, well, how much is it to hire someone else to mow the lawn? What could I be doing with my time? We all have the same 24 hours in the day. And a lot of times it's like, what can I be doing with my time instead of mowing the lawn that can help drive me forward, either in my business, my personal life, whatever that may be.
It's true. I mean, just before this episode, there was a group I didn't join, a real estate investing group that I was avoiding. Why? Because it was like $300 a year to join the group. Like, so my old belief was like, that's probably not worth it. I'm thinking $300 a year. I spend way more than that on YouTube and everything else. Why not? And so I finally did it. And then I found out, I Googled my name. People had actually recommended me, but I wasn't in the group for them to attach to it. So it's like, holy cow, I've been talked about in this group and I should have joined it years ago. What was holding me back? It was just me, my own old belief systems.
Wow, that's powerful. And it goes to show too that it's not something that it just goes away. It's like something that you constantly work at too, right?
That's right. Yeah. Oh, you always have to question it.
All right, Chris, fifth and final question we have here. What is the best way for our listeners to get in contact with you?
Easiest way is you can go to moneyripples.com. Check out our website. We've got stuff there. You can even attach to our podcast there. Obviously, you can go to YouTube. You're already on YouTube right now anyways, probably. So look up Money Ripples and there's my ugly mug right there. So you can check out all our videos and as well as check out our stuff on moneyripples.com.
Chris, really tons of great information today. I really liked how you talked about your journey from transitioning from a financial advisor to getting yourself in a position where you were, quote unquote, retired by the age of 28. Right. Or what was the term that you used for it again?
Work optional, right?
Work optional by 28, right? I liked how you talked about the adversity that you had to overcome once the market took a tank and you had to find yourself building yourself and crawling yourself out of this hole of $1 million in debt. I also liked how you talked about how you want to go about and sharing this information with other people so you can help them shift their mindsets and be able to make that change in the trajectory of their lives so they can benefit from it now and not when they're 65. I just want to thank you again for being an amazing guest on our show and look forward to remaining in touch.
Such an honor, Chris. Thank you so much.
Now, if you like this show and want to learn more about how we can help you free up your time through passive real estate investments, check out www.freedominvesting.com. Make sure to subscribe to our monthly newsletter and schedule an introductory call with our team. We also have a free 7-day course on what passive real estate investing is and how to get started so that you can start your journey towards earning back more time in your life. To all of our amazing listeners here on the Freedom Investing Podcast, my name is Chris Toribio. Till next time.